protected zone. Once we break this low, then the market is going to do what? It's going to be looking for a continuation on the downside once we break this low. But if that doesn't happen and the market breaks above, then we're going to continue. This is just like a pause in the market. The market does that sometimes. It takes a very nice pause, which is a long consolidation before a continuation or a break on the low. So when you see a consolidation like this, what you need to do is just stick to your hand, like put your hands together and just sit on them. Just sit on them and wait for the market to break out to give you the direction. Once the market breaks out, okay, once the market breaks out, then what you need to do is identify this area here, the origin of that move, and wait for the market to come back, especially if you don't catch it as it moves, for the market to come back, and then ride with it again in the same direction. Once you ride it with it in the same direction, then now you're just going to target the most recent high, which is going to be this, and you're out of the market. All right. So that is just what I wanted to do a recap on yesterday's trade. And then after that, what happens? So in regards to what I've just explained to you, look at this one here. So this market was consolidating. There was a big consolidation here, a big consolidation. And then the market decided to fly all the way. Okay. So once it did that, what happened? It decided to come back to the origin of this fly, and now it's pushing up. So if this market goes all the way, there's a high possibility the market is going to create a new high. So you see, this was a consolidation. The whole of this was a consolidation. This one here, it was a consolidation, and then the market broke out. So there was that breakout that went all the way, and once the breakout took place, what happened? The market came back to the last area, the last bearish candle before the market went all the way up. The last bearish candle before the market went all the way up, that is what we call an order block, and the market came back to the same order block before reversing towards the upside again. So right now, we are looking to see this market push all the way to somewhere here. High possibility. That is very far, but if it reaches there, then that will have given us very good money. In the meantime, what are we doing? We're just looking at the market to play out, follow it slowly and slowly until it reaches all the way up there. Now, if we had taken a buy here, and decided to hold, then you would have hold with what? With break even, probably with a stop loss at entry, and then you just hold it. You just wait for the market to like play out. Right? Wait for the market to like play out. Of course, it will not just fly with one go. What it will do is it will just go, retest, go, retest, go, retest. But eventually, this is where it's looking to go to. Areas where we're going to be expecting the market to like pause is here. This is first area that we're expecting the market to pause once it gets there. This is also an area that we expect the market to pause once it gets there. Here, okay. And then once it breaks above, then we're going to continue to our zone. Then once it breaks above this, then we're going to be looking to pause around this area here, okay. And then once it breaks above this, then we're going to be looking to create new highs, okay. So I hope that makes sense, guys. That is from yesterday's lesson, and I hope you have understood. Now we're getting into today's class. All these are trading materials. These are all trading materials. I have so many of them. You guys don't have any idea how much material I have. All these are folders with different materials. So I'm looking for Dexter. Where is Dexter? Okay, that's here. Where is Dexter? Here is Dexter. I'm looking for Dexter. I have understood, but I have understood, but wouldn't that SL be too far? I was giving an example on the 4-hour time frame, but remember, whenever you find an order block, whenever you find an order block on the 4-hour time frame, what you need to do is wait for the market to come back to the same place, and then once it reaches there, what you need to do is refine your entry. Okay, what do I mean by that? This is what I mean. I want to find out if you guys can see what I'm sharing. Oh, okay. I have to stop sharing then share again. Okay. So what I mean is this. Wait. What I mean is this. This is what I mean. Let's assume this is 4-hour time frame. Okay, 4-hour time frame, and this is your area of interest. This is the where you want the market to come back to before you look for entry. Once the market comes back here, okay, that's the first leg. It has just come in, okay? So what you need to do, you're supposed to shift from now, the 4-hour time frame, to the 15 minutes time frame. So now what you need to do is go to the 15 minutes time frame. On the 15 minutes time frame, this is what you want to see. You want to see the market do this, get out of that zone, come back, and get out again. From once it taps that zone, then now you want to see the market do that on the lower time frame, which is 15 minutes time frame. Once you see that, this is going to be your change of character or market structure shift. And then you are going to identify now a new order block on the 15 minutes time frame, which is going to be a bit smaller. So it is an order block inside the 4-hour time frame. Once the market taps into the 4-hour time frame, then you're going to be looking for an order block inside that 4-hour time frame. Okay, that is now under the 15 minutes time frame. So once you identify the order block, you want to wait for the market to come back to the order block on the 15 minutes time frame. Then now go to the 5 minutes time frame and take your entry. On the 5 minutes time frame, you're going to be looking for a bullish engulfing candlestick. And then once you get to see a bullish engulfing candlestick, you wait for a 50% retest of the same candle, and then now you take your entry. So that basically means your risk is going to be this 5 minutes order block here. On 15 minutes order block, that's going to be your risk, and then you're targeting that high. So that is how you refine the entry. And that's what I did yesterday. And on my refinement yesterday, I found myself doing what? Looking at, you see, this is what I did. This is what I did. I took the entry after I saw the break above here. I took the entry here, and then what did I do? I placed my stop loss here. It was 4 or 7. I placed my stop loss on the 4 or 7 here. Okay. So what the market did is it took this here, this became equal highs, sorry. This became equal highs. Instead of looking at this as a market structure shift, it created equal highs here, went out to take out the liquidity on this double bottom here. You can see we have this double low. We have this liquidity, double bottom 1 and 2. Okay, that's a double bottom. It's a liquidity zone. Came out to take out that liquidity, and then after that, the market now pushed all the way up. So what we were supposed to do, we're supposed to wait for the market to take out this liquidity. Once it does that, then now use this bullish engulfing candlestick on the 15 minutes time frame as our entry zone, as our entry reason, okay, or as our entry point, and we take the entry for that. So we were very right. We were very right. The only mistake that we did yesterday was that we went in a bit early. That's the only mistake we did. That's the only mistake we did. And sometimes such mistakes can really cost you. Like you're like, oh man, you even get scared of going back into the market, right? You're like, ah, now how did I miss this? So for me, I once I hit stop loss on this, I just left. I had a lot of things I was doing yesterday, So I did not check at the charts again like the whole day. So, but if I had checked this, I would have gotten it for the second entry. We would have taken it the second entry, guys. But today we're going to recover. Today we're going to recover. Today we are going to recover what we lost yesterday. Okay. So now sometimes when the market makes this move, like for example here you can see the market made this move. You have this. You can see here that see this move. So sometimes you come in and then you find that the market has given you a very nice shift. Like this is a change of character here, has made a very nice shift. So sometimes when this market makes such kind of shifts, this is your area of validation here. This is your area of validation here, right? This is what makes the market remain up on an uptrend. But do you think the market is going to like do a retest back to this zone? No, most of the time it doesn't. So this market will always, like not even always, but 90% of the time, the market will always come to this high, which is going to be turned to a low. That is, the resistance becomes support on this side, and then now the market is going to come to that zone and then pushed up. Once it creates a new high, again, the same resistance that is going to become a support on the other side, and the market is going to like tap into that and then push all the way up again. So if this is now the current resistance that we're in, right? If this is the current resistance that we're in, if the market breaks above this resistance and creates a new high, breaks above and creates a new high, what am I trying to say? Trying to say if it breaks above and creates a new high, then what you need to do is look out here. Just wait for the market to come here and be on the lookout. Try to find out how the market is going to react on this resistance after it breaks above. Okay, your order block is going to be here. This one has not played out. I'm just assuming that if the market turns around and breaks above, this is going to be your order block. Okay, now if the market breaks above, this is going to be your order block. Please mark it out. But now be keen on how the market is going to react on this resistance, because most of the time the market turns around from the resistance becomes support, the resistance becomes support. That is basically what most of the time happens. And even if it breaks on the low, then the lower side, if it breaks on the lower side, still the same. If it breaks on the lower side, it's still the same. Once it breaks on the lower side, just try to find out. Wait and see how the market is going to react on that support that is going to be turned to resistance as the market continues to drop. Right? I hope that makes sense, guys. I hope that makes sense. Does it make sense? Does it make sense? Does it make sense? Yes, it does. Awesome. Awesome. Okay, cool. So let's get into today's lesson. Any questions so far regarding yesterday's class? Any questions so far, guys? Any questions? No questions? Be good. Thank you. Awesome. Let me share my screen. All right. So, ladies and gentlemen, welcome to Mirage FX Library. See all this? This is all materials for the trading. These are all materials. You don't need all this. You don't need them all. I'm just going to give you what you need. You don't need all this. I'm just going to give you guys what you need. I'm going to simplify things. I'm going to make things a bit easy for you. This is my all-time favorite book. This is my all-time favorite book, and it's called Why is it slow? Why is it slow? Okay, let me stop sharing and then I share. Okay. There you go. Can you see what I'm sharing on my screen?
Yes, yes, we can.
Okay, awesome. So now, our mentorship program begins here. And this book, this, ladies and gentlemen, is the Smart Money Bible. This is a book that was written by a trader called Dexter, and Dexter is a this is a guru. Is a guru. Let me just say a guru. Is a guy I'm personally following very, very close, and I've studied his notes so many times. And this is just what a summary of what the market is all about, how the banks trade. This is just how the banks trade. Everything to do with what is looked, what the banks look at, how they look at, what the banks look for, how they look for whatever they're looking for, how they take entries, and how they think. This is basically what you're going to see in this Bible. So we're going to study this, and we're going to be moving from here, going to the chart, moving from here, going to the chart, applying everything we are seeing from the beginning to the end. And this, ladies and gentlemen, is Smart Money Concepts. Welcome to today's Smart Money Concept class, Chapter 1. Chapter 1 is going to be, what is Smart Money Concepts? Like, you need to understand. So we're going to do all this, right? We're going to do all this slowly taking trades, and it's going to be easy for us. It's going to be very, very awesome for us. Like, I can tell you for a fact. So why this book? For me, the reason as to why I chose this book is the same reason why this book was written, right? Because this one is going to give you so much information, detailed information on the market concept, like the smart money concept that so many traders are using. And not just traders, but institutional traders, right? So this book is going to give you so much information about what smart money concept is, or the strategy, the smart money concept strategy, right? And every chapter has been created or has been written in order to enlighten you from one segment to another. Like, they are building up from one segment, building up to the next segment, like that. So we'll share the experience. This guy says he's going to share the experience that he has been able to gain on the smart money concept. And that by the time this book was being written, he was a 2-year old smart money concept trader. And that was way back. Okay. So this strategy changed his life, according to what he's saying. And yeah, I can tell you for a fact, for me, this has been awesome too. And of course, I combine with a few things here and there, but like, this is the basis of my strategy is smart money concept. That's the basis of my strategy, right? That's the basis of my strategy. So please just brace yourselves, get ready, and this is going to be worth your lifetime. Okay. Now, what is smart money concept? It's always good to like understand the basis of the strategy from the beginning. Like, what's the origin, right? Or where did it start from, and why smart money concept? Okay. So this term refers to institutional investors, central banks, financial professionals, the force that influences the moves, the force that influences and moves the market. So when you hear about smart money concept, just know that we're talking about the forces that are actually move the market. As we are what we call retail traders, we do not have money. We do not have enough liquid to move the price even an inch, right? What we are in the market when it comes to the kind of capital that we have can be compared to your spit and the ocean. It makes zero difference. It makes zero difference, all right? We don't have enough capital because we're getting into this market with people who are taking millions and investing millions and millions of money, and we're getting in with our $10, $100, $1,000, right? And we're going to be trading with the same people. So smart money concepts refers to professionals, right? Central banks, financial institutions, hedge funds, investors, all right? Guys who have lots of money. And we also call them the market makers. So this smart money was originally a gambling term that referred to the wages made by gamblers with a track record of success. I want you to put an underline here, track record of success. So when talking about smart money concept, we're talking about people or institutions who are taking big entries in the market, but they all have a track record of success. That is what I'm trying to talk about. So different vectors, different people, like to use the smart money strategy. And personally, I also feel like this is a very, very good strategy. Right? So a lot of mentors love to say that smart money strategies follow what the banks are doing. Personally, I used to say that this is a common strategy. It follows the price action. The storytelling built around that seems totally legit. But as I don't have 100% proof, I prefer to use the original version of the definition, and that is the smart money allows me to have a track record of success. That is all I care about. Okay, so when it comes to trading with a smart money concept, just know that you're going to have a track record of success. The beauty of it is that you can pinpoint areas in the market where certain things are going to be happening, and they happen exactly the same way. So that is why this becomes one of the best strategies, because it points out specific things that are you're going to be able to see them happen at specific zones, right? That is basically why I love it. Like when you say this is going to be an order block and the market is going to come back to this order block, and few minutes later or few hours later, you see the market come back to the same place, right? Before it turns around. So those are things that we're going to study in details, all right? We're going to study these in details, and I can tell you for a fact it's going to be a smooth ride. It's going to be a smooth ride. It's going to be a smooth ride, okay? So the price action, especially smart money concept, was clearly what I needed. This is what the guy is trying to say, that this is what he needed to change the difference, to get the difference, right? This is what he just needed to have a different feel completely about trading. Okay, if you feel that your stop loss is chased with the strategy, smart money concept could be the explanation. Smart money contains multiple concepts that need to be implemented little by little, little by little, little by little. It has multiple concepts that needs to be implemented little by little. The mix of all these concepts will allow the nice risk-to-reward ratio trade. When you mix these concepts little by little, you're going to get very good entries with small risk and higher rewards. But one thing that needs to be very clear in your head is that the strategy and the psychology are two different things. In fact, the psychological part remains the biggest part of your trading journey. Let me repeat that. Trading strategy, your trading strategy and your psychology. Your psychology plays a greater deal in your success than your strategy. Does that make sense? Your strategy is only 20%. Your psychology is supposed to be taking 80% of your trading journey. You could be knowing everything. You have this best strategy. But if your psychology is not right, trust you me, you can never make it in this market. Right? So we are going to, that is a lesson we are going to hammer, not just teach. That is a lesson I am going to hammer in your heads. That trading psychology. I am going to get a hammer, a drill, and squeeze it inside and lock it in there. Until you guys say it's enough. Right? Because that takes like the biggest part. Right? The psychology, your psychology is very, very important. Like it's very, very important. Without psychology, trust you me, you can have the best strategy, you can have the best risk to reward ratio. If your strategy, if your psychology is messed up, you will quit this game within a very short period of time. All right. So you guys get ready for that. Okay. Get ready for that. Okay. Yeah. So this is what I wanted to share with you. You're laughing. I'm telling you the truth. I'm telling you the truth, guys. I'm telling you the truth. That with the psychology, we're going to like ensure that you get it. You get it. Okay. So let's get into the market. So market structure. When somebody says structure is king, what do they mean? When somebody say the structure is king, what do they mean? They mean the structure that the market is forming is what you need to be very, very conversant with. As in, you have to be very, very, you have to understand it with the fingertips. Okay, this meeting is ending in the next few seconds. So once it ends, I'm going to send you a different link. We can use the same link actually. Once it ends, we can use the same link and just rejoin. Okay, so it's coming to an end in a few. It's just going to like stop. Once it stops, just click on the same link and then we rejoin. So market structure is king. And every small candle or big candle you see, it is forming up on the structure. It is forming up on the structure. It's